Well, hello folks, I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective. Each day we ask ourselves one question: what happened today, and what does it tell us about the coming ones? We do a show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. You can catch it there anytime, any place, any device. Just pop over to that area. If you come here to NeoTA TV, you can pop in there from here. You can subscribe. You can also send me questions if you have questions for me. I'm always able and willing to take those questions. I think it adds flavor to the show. As far as these markets and what happened today, let's take a look at it and see what we got here. Okay, so we had red on the screens, nothing huge. Russell's down more than most, but anywhere from 0.5% up a little bit. NDX was the best performer. Apple was doing well. Gold got a decent spike. Oil as well. Dollar was flat, and that was pretty much the story. Bonds down again a little bit, not too much. As far as the way it looks, let's take a look at the markets. I'm starting here with the Russell because the Russell came back harder than the rest. It's back inside that range. One of the things we were talking about is, would the Russell trade back inside the range? And indeed it has. And that range we're talking about is this area here. You can see it's back up inside that. From about there to there. Back up inside of it. Pops out, comes back in. It did stay up there for a couple bars. That's a good sign. The bad news is, of course, that it's fell back inside the range. So that's a bad piece of news if we're looking for the good and the bad. If we pop over to the S&P 500, S&P, as you remember, on Friday, got the spike up here, right? Spikes over these two highs, but can't hold it. Can't hold it on price. Falls back inside the range, and today pulls back a little bit. Now, one of the things I was talking about last night is really, to get a breakout, what we need to see is a break of these trends. In other words, every time we've gone down, it's been straight. Every time we've gone up, it's been straight. And that's been 70-point ranges now, up and down, for the last 7 times. 1, 2, 3, 4, 5, 6. This is the 7th. So 6 of the last 9, or 6 of the last 8, I guess, have been this way, right? And you had some consolidation up here, but other than that, it's pretty much up and down. If you're going to get a breakout, you need price to hold somewhere so that you can actually break out. By the time you make this run from here to there, it's too far. It's a 5-day straight up or a 5-day straight down, and that just makes it almost impossible to get a breakout by the time you get to the other side of the range. So you want to see it fade back in here and hold. Now let's say it comes all the way down here this week again. Well, if it bounces and fails, right, then you could get the same sort of action to the downside if it were to hold. I kind of see this middle ground that we see here as the key area. And so if we look at it on the TA Today charts, it's kind of highlighted in green as anchored support. That's kind of the key area. It's at the bottom and tops of these bars. That to me, if this is going to come down, you really want to see it hold here at worst. Top of this bar, bottom of that one. That would give you the ability to break this thing higher and go back up and test highs. So that's the question, can it do it? Today we come back on no volume. That's true on the Russell, that's true on the Dow, the S&P 500, on the NASDAQ. All of them look the same. All of them came back. All of them faded back in. All of them no volume. What does that tell us? It tells us absolutely nothing. You get up to resistance, you try to break over it on Friday, you fade, you return, and you fade back in on a little follow through the day, but nobody wants to really sell, as you saw in that graphic. If we pull over and we look at the sectors, right, even here it looks about the same. So if I start out with like IBB, pulling back, no volume. If I look at IYT, actually got a little volume, also rolls over and pulls back. SOX, no volume, pulls back. Excuse me, does have volume, pulls back. The ones that were strong today are what you probably wouldn't want to see strong. You'd want to see some of the others. XLE, but XLE gets over the top, tests into this high again, fails on price, on volume. That looks like it's ready to probably turn. XLB gets over the top, back under it. That's just like it did back here. Also wants to come back in. Now, the XLB will have a retest regen on the way back in, so we'll see how it behaves at that price point. I don't know that it's going to tell us a lot because so far this one hasn't been holding up very well, but it is a measurement stick that we can look at. XLF. Remember, the XLF has been dealing with a retest regen zone that it has been unable to get over since December. That's this price zone. Got over it on Friday, failed, came back into it, comes back in some more today. So that regenerate zone still wants to try and regenerate lower. And what that really means is if you look at it on a weekly chart, that says that this moved down. Remember, it broke under this retest regenerate, so it's no longer an uptrend on the weekly, but instead of sideways type trend. And even though we don't see it here in terms of the actual trend change, the fact that it couldn't hold that retest regenerate zone here tells you that at best it's probably going sideways for now. And so getting back to that idea, if this thing is sideways and has the potential to break down, you have an ABCD structure potentially that could form to take this quite a bit lower. Jury's still out on that. We'll have to see how it trades, but this still, to me, is one of the key sectors to be watching because the XLF is a key sector, just like the XLK, which we'll look at next, which also rolls over. Still hasn't been able to get above these swing point highs. That's been a thorn in the bull's side. XLI, not a lot there, just comes back a little bit. What's interesting to me is the XLP, which is a safety play, the XLU, also a safety play. Both of those can't get going, and even the XLV doing the same thing. Very sloppy chart here. Now the XLU and P to some degree are more so dependent on the interest rates, and those interest rates have been going up as a result of the bonds falling. If we go over and look at the TLT, for example, you can see it was down again today, pressing into that big bar, trying to get up underneath it. And if you look at it on the weekly, the spike high back here on the October 15th low, or right before it actually, it was on the 13th. Oh, that's the week. So that was the week of that 15th low. That spike high, which was on the 15th, is the target on the weekly. So we may see some more drawdown there, which would continue to put pressure on utilities, XLP, so forth. If you look at the shorter end of the curve, it's happening all across the curve. It's not just one part of it, it's all of it. Here's the 1 to 3s. You can see them trading down. The 3 to 7s, the 7 to 10s, they're all the same. They're all trading back down to the backside. Junk bonds don't look that much different, just hanging there, can't really get anything going. The investment grade corporate bonds also have pulled back and just kind of hanging. If I look at other signs of fear other than, say, bonds, like gold, for example, gold's not really telling us anything. And if we move over and look at silver, silver usually a little bit more volatile. It got a better bounce, but right now I don't know that any of these are telling us anything more than we'd already seen. Finally, if we look at the dollar, which has been on a tear, it's still consolidating up here at the top. That consolidation to me says that we're not out of the woods on the potential for some more downside activity. Overseas, they sold those down as well. And so all in all, it looks to me like this market didn't give us much of anything today in terms of new information other than a small follow through after Friday's pullback. And so, if we're looking at it from that perspective and asking ourselves, what do we have here? Then, what we have is a market that is still in a range. I mean, nothing's really changed. We have a range trade, and if I pull this back up, we got a range trade here. As soon as I get this back on the screen, We got a range trade here on the S&P 500, not really telling us anything different than it has. What's going to tell us something different is if you get a pullback and actually start to retrace back higher instead of continuing lower. And so far, we simply haven't seen that. I don't have any viewer questions today. It's going to be a short show. I don't have any highlights either. I was out most of the day. I was at some meetings, so I'm going to leave it at that today. I'm going to call it a short show, and tomorrow is going to be more of the same. We'll see if it wants to pull back some more or not. I'm looking to see some strength come in and not a straight down move. If we get a straight down move, we've got the exact same thing we've had. If we find some consolidation, in particular at or above this area, that would actually signal some sort of a change in the behavior, which is not something we've seen in a long time. This market is news driven as well, folks. I mean, that's why we have all this consolidation in this large range with a lot of volatility. It's news driven. Greece still driving home the ideal. I even saw a note today that Greece wants Germany to pay reparations for I assume it's World War II. And I mean, it just seems to me like it's becoming a bitter fight over there. I don't know if they're going to reach a conclusion or not. You still kind of got the Ukraine situation on the back burner, with the United States wanting to arm Ukraine, the Germans and the French not wanting to, Russia, of course, just trying to play the two against each other. And then you've got the oil. And matter of fact, I didn't touch on oil that much. Let's look quickly, since I have time. Let's quickly look at that oil market. Today, oil was up about 1.5%, 2%. But if you look at it, you know, the big spike up, top of that was 2029 on the USO. You got the 2018 today. That bar it's trying to go into is about 2053. I wouldn't be surprised to see oil try to spike that and then fail. There's no volume. Volume's tailing off. It looks to me like you're going to get another move down. It's just a question of how it forms. So I wouldn't be too long this sector for an extended period of time, because you're really trading against the trend. And that's the danger of doing these things. All right, folks, have a great night. I'll see you next time. Take care.